Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings without falling asleep ourselves. Today we're cracking open the Apex 11 Inc. 10K, and I'm already sensing some serious shell company vibes, which usually means either a brilliant turnaround story or, well, you'll see. This report is Apex 11's annual checkup, a deep dive into their financials and operations for the year ended December 31, 2024. Think of it as the corporate equivalent of going to the doctor, except instead of getting a lollipop, we get to sift through pages of legalese and numbers. Ard and wine hop, we get to sift through pages of legalese and numbers clapped. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in and description below. Come check it out and discuss your favorite companies with like-minded people. First things first, Apex 11 Inc. This company was set up way back in 2013, and listen to this. Their plan is to, and I quote, engage in any lawful corporate undertaking, including but not limited to selected mergers and acquisitions. So basically, they're open to anything. The main focus is their hunt for a company to buy or merge with, something actively making money. They're not picky about industry or location. The goal is to find a business that wants to be public, maybe to raise money or give stock options to employees. It's like corporate speed dating, except instead of finding love, they're trying to find a viable business. Now, let's talk about security, or rather the lack thereof. They haven't had any major cyber incidents yet, but they also haven't really done much to prevent them, which is a bit concerning. They are keeping up to date our information systems and educating our personnel about these risks, which could be better. It sounds like they plan to get to it eventually. As a smaller reporting company, they don't have to talk about risk factors. It's a shorter report and frankly more boring for it. We will have to look in other places to try and find what's up with the company. The company admitted they don't have cybersecurity policies. That alone makes a risk factor for them. If you are considering investing into a company, remember that if they don't think they are targets of cyber attacks or ransomware, maybe they don't understand the risk itself. Good news here, they aren't currently involved in any lawsuits, which is always a plus. A clear legal slate means one less headache for potential investors and one less thing to distract management. Since the company has no trading of securities, there isn't much we can say about market information, but they only have a single shareholder recorded. This means the stock is pretty much held entirely by one person, giving them almost complete control. That can be good for quick decisions, but it also means less oversight and potential conflicts of interest. The company has never given out dividends to its shareholders, and they don't expect to anytime soon. Instead of handing out cash, they plan to reinvest any profits back into the business, which is what we would expect from a growth-focused company. Now we get into the management's discussion and analysis of financial condition and results of operations. They mention how the COVID-19 pandemic has affected business and markets. They are using language that sounds like it was copy and pasted from a template from that time. Keep in mind this is for the period ended December 31, 2024. It's important to be aware of the current global environment and how it might affect the company's plans, but the report should be relevant to the period it covers. To summarize, Apex 11 is still on the hunt for a company to buy or merge with, and they're open to various options. They want audited financial statements to look at before buying an entity. Okay, let's check their performance for the year ended December 31, 2024. They didn't make any money either year. Selling, general and administrative expenses decreased from roughly $33,000. This drop is due to the company spending less money on being a public reporting company, such as service fees, and getting their SEC reports ready. While saving money is always good, slashing expenses too much can sometimes signal a company is in survival mode. They are reporting negative cash flow. This is due to covering their net loss while also working to comply with being a public company. It's not unexpected for a company in this stage, but it means they're relying on outside funding to keep the lights on. Since they aren't doing any business abroad, they don't have to worry about exchange rates. Okay, here comes the moment of truth, the report of independent registered public accounting firm. Basically, an outside auditor checks the company's books and gives their opinion on whether everything looks good, at least financially. They are saying there is substantial doubt about the company's ability to continue as a going concern. That is not what you want to see as an investor. This means there's significant uncertainty about whether the company can stay afloat. Time to dive into the financials and look at the balance sheets. Total liabilities are roughly $2,200. Accumulated deficit is about $260,000 compared to assets of about $400. Overall, the picture painted by this balance sheet is that the company is basically non-existent. General and administrative expenses, as mentioned earlier, were around $27,000 for 2024. Given that they're essentially a shell company, this primarily covers the costs of staying compliant and searching for a business to acquire. The net loss, unsurprisingly, is also about $27,000. With no revenue, expenses directly translate to losses. Time to take a look at the statements of cash flows. Cash and cash equivalents at the end of the year, both this year and the last, zero. They are not holding any cash. Looking at the stockholders deficiency and the stockholders equity deficiency Demian section, we can see that in 24, roughly 5.8 million shares were issued for about $27,000 to settle debts. In 2023, about 7 million shares were issued for about $32,000 for the same purpose. It looks like the company's main activity is to dilute shares. They have net operating loss carry forwards of $260,000 to offset future taxes. This is important for investors as these losses reduce future tax bills. Management admits that their disclosure controls and procedures were not effective. In plain English, this means they didn't have a good system for making sure the information they reported was accurate and timely. Management has 4 listed issues, including not having segregation of duties, no independent directors, and ineffective controls. They plan to try and create a more structured accounting practice when funds are available to do so. Let's take a quick look at who's running the show. Anthony Arocha is the president, CEO, secretary, treasurer, and a director. Michael Schnoss is also a director. Both are around 71 years old and have significant experience. All the necessary SEC filings were made on time, which is a basic requirement but still important. They don't have formal guidelines for stock awards and haven't set up a finance department yet, which is unusual for a public company. During the year, they issued common stock for settlement of accrued liabilities to their controlling stockholder. The company spent $17,000 in 2024 and $19,000 in 2023 for audit fees. Not a huge amount, but it's a necessary expense for staying public. Chop K, having gone through Apex 11's filing, here are my thoughts. It is hard to see what direction they are going in. On one hand, they haven't lost a lot of money, but on the other hand, they aren't doing anything. Given the auditor's concern about the company's ability to continue as a going concern and the lack of any clear strategy, there are definitely risks involved. That being said, the long-term losses could be an opportunity for tax write-offs. Alright, that's our breakdown of Apex 11's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.